I like physical silver still. It's back above 30. In fact, it's back above $31 an ounce. We did get below 29 again very briefly. And again, I think 29 is for silver what 2000 used to be for gold. If you get a chance to buy it below that level, you definitely want to do it. The problem is there may not be another chance to buy it that cheap. I think buying silver even above 31, 32 in that area is still very cheap. I think pretty soon 50 is going to be the new 30. In fact, I think 50 is going to be the support for silver.
The precious metals market continues to demonstrate strength and resilience, with gold and silver prices attracting significant attention from investors and analysts alike. Despite a slight pullback in early Asian trading on Monday, with gold facing some selling pressure near $2,385, the overall trend remains bullish. Renowned economist and financial commentator Peter Schiff has been particularly vocal about the potential of precious metals in the current economic climate. Schiff, known for his accurate predictions of past economic crises, highlights the sector's strong performance and maintains a bullish outlook on gold and silver. The recent FOMC minutes have played a crucial role in shaping market sentiment. Policymakers' acknowledgment of easing price pressures has fueled expectations of potential Federal Reserve rate cuts this year. This outlook has put pressure on the US dollar, potentially benefiting dollar-denominated assets like gold. The positive sentiment is not limited to physical metals. The Australian stock market has seen a notable uptick in gold-related equities, with the S&P ASX All Ords Gold Index rising by an impressive 1.7% in morning trade. This movement aligns with Schiff's bullish stance on gold mining stocks, which he believes are undervalued and poised for strong earnings. Often overlooked in favor of its more famous counterpart, silver has also been making significant strides. The metal recently breached the $31 per ounce mark, with analysts projecting further gains. Targets of $31.50 and $32 are now in sight, underlining the metal's bullish trend. Schiff particularly emphasizes silver's potential, recommending it as a smart buy for investors. He predicts that silver could reach substantially higher levels in the future, presenting an attractive opportunity for those looking to diversify their portfolios. Please tune in for our exploration of Peter Schiff's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
The public may not like the weak economy, but Wall Street does. Stocks rallied on Friday. In fact, the S&P and NASDAQ, led by big tech, made new all-time record highs, at least nominal highs in terms of dollars. In fact, for the week, the NASDAQ was up 2.8%, and the triple Qs, which is just the biggest of the NASDAQ stocks, was up 3%. Not as big a gain in the S&P 500, although record territory, up 1.3% on the week. The Dow was up 0.78%. Only the Russell 2000 ended up down on the week, probably more economically sensitive. A lot of smaller companies that are more sensitive to the weak economic data. The big tech stocks, they're the ones that are more looking for rate cuts to boost their valuations for all the growth that the markets are inferring is going to happen into the future. But also gold. Gold had a nice week. It closed above 2,390 or right about there. So close to 2,400 again, just about 2% off its all-time record high. Gold was up 2.64% on the week. Silver also had a strong week. Gold stocks had a good week. The GDX up 5.3% on the week. GDXJ up 5.85% on the week. That index now, or the GDX, is only about 3% below its record high. So it has been gaining back some of what it lost, but the indexes are still way behind where they should be. I mean, gold is holding at a very high price. I expect a lot of these gold mining companies to report much better earnings than the street expects, because the price of gold is staying at much higher prices for a much longer period of time than these analysts penciled into their earnings forecast. So I still think that this is the best way right now to play the gold sector is through these mining stocks. I think they're still dirt cheap. There's incredible value there. People should be buying these stocks. I like physical silver still. It's back above 30. In fact, it's back above $31 an ounce. We did get below 29 again very briefly. And again, I think 29 is for silver what 2000 used to be for gold. If you get a chance to buy it below that level, you definitely want to do it. The problem is there may not be another chance to buy it that cheap. I think buying silver even above 31, 32 in that area is still very cheap. I think pretty soon 50 is going to be the new 30. In fact, I think 50 is going to be the support for silver. So to buy some physical silver, you want to talk to the representatives at Schiff Gold. I mean, the name is Schiff Gold, but it's Schiff Gold and silver. In fact, we sell platinum and palladium as well. I mean, those metals are probably also pretty good buys, but right now I'd put money into silver. So you can talk to the Schiff Gold representatives about buying some silver, particularly if you're in Bitcoin. I think it's a great time to switch out of fool's gold into the real thing, or maybe even silver, or better yet, maybe sell your Bitcoin and buy some gold and silver mining stocks.
The U.S. labor market presented a complex picture in June 2024, with solid overall job growth masking underlying weaknesses that could influence Federal Reserve policy. While the economy added jobs, the unemployment rate rose to a 2.5-year high of 4.1%. Signaling a potential softening in the labor market. Government and healthcare sectors dominated job creation, accounting for roughly 3/4 of the gains. This concentration in public and service sectors, rather than broad-based private sector growth, has raised concerns among economists like Peter Schiff. Schiff argues that the report reveals economic fragility, pointing to downward revisions of previous month's figures and a shift towards part-time employment as strain indicators. The labor force expanded by 277,000 individuals, contributing to the rise in unemployment from May's 4.0%. This influx of job seekers and the slowest annual wage growth in 3 years suggests a more competitive job market with potentially less bargaining power for workers. Adding to the complexity, the Labor Department revised job creation figures for April and May, downward by 111,000, indicating a decelerating trend in payroll growth. This revision aligns with Schiff's analysis of private sector underperformance and the potentially problematic nature of government job growth. Let's get back to the interview.
Let's get started by talking about the big news that came out on Friday from the Labor Department. Of course, it was the first Friday of the month, and so we get the official government jobs report for the month of June. And, once again, superficially, the way it's reported in the media, it was another beat. They were expecting 189,000 jobs created, and we ended up exceeding that with 206,000 jobs. So it was above 206,000. In fact, Biden once again bragged that the jobs that were created were over 200,000 for the month. Of course, he took credit for those jobs. But as is normally the case, once you look beneath the surface, and you don't have to look deep beneath the surface, you get another very weak jobs report. Let's start with their downward revisions, because there were quite a few downward revisions. Both of the prior months were revised down. So April was revised down by 57,000 jobs. And May was revised down by 54,000 jobs. That's not insignificant. In fact, I think both of those months with the revisions, had they been reported accurately the first time, these jobs numbers would have been misses instead of beats. So the combined elimination of jobs that were previously reported as having been created was 110,000. So it really wasn't a 17,000 job beat. It was a 93,000 job miss. But again, the character of the jobs, it's still low paying, part-time jobs. In fact, if you just look over the last year, the government claims credit for 2.6 million jobs being created. Within that number, 1.55 million full-time jobs were lost. So all of the jobs that were created were part-time jobs. And in fact, over the past year, only 195,000 more people are employed now than were employed then. And of course, they're employed part-time, not full-time. But pretty much all these jobs were created for people who were already employed and who are now moonlighting in second or third jobs. And that is why, again, Joe Biden remains so unpopular, because the economy is actually very weak because a lot of people are struggling to get by. Yes, they have 2 or 3 more jobs than they used to have, but they're not happy about that. They would prefer not to need these jobs, but they have no choice. But I think even worse was the poor performance of the private sector. We were supposed to have 160,000 private sector jobs created. Instead, it was only 136,000. And the prior month's 229,000 private sector jobs was reduced to just 193,000. Over a third of all the jobs that were created during the month were government jobs. We don't want more government jobs. We can't afford more government jobs. Where is the government getting the money to hire these people? It's borrowing it. We're going deeper into debt. And these are not productive jobs. In fact, every time the government hires somebody, it generally makes the private sector less productive because the government workers get in the way of productivity. They don't enhance productivity, they reduce it. So because we have more people working for government, we're going to have larger budget deficits because we have to borrow the money to pay their salaries. Now they're going to go spend that money, so that's inflationary.
While the precious metals market shows strength, it's important to note that challenges remain. The modest rebound of the US dollar and the Chinese central bank's pause in gold buying for the second consecutive month could pose short-term headwinds. However, geopolitical uncertainties drive safe haven flows, potentially supporting precious metal prices. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.